Welcome to a brand new show of Markets Tomorrow. I'm Nikunj Dalmia. After a strong Friday, it was a rather flat Monday for Indian markets, and Indian markets clearly failed to capitalize on strong global cues. But tomorrow, the first credit policy for this year is due. What are the expectations? And after today's flat trade, what's in store for benchmark indices? We'll discuss that and much more for you in this edition of Markets Tomorrow with the help of Prasun Kajri, Chief Investment Officer with HDFC Standard Life Insurance. And to give us a technical sense of how things are shaping up, Sandeep Wagle, Founder and Managing Director of Apitat Technical Advisory, will join us. Sandeep, very okay day for Indian markets. We clearly have failed to capitalize on the Friday advantage.
Well, you're right, Nikunj. I mean, nothing great, very, very highly positive is expected probably. That is what is seen, as I would say. And probably a 25 basis point cut is what the market is discounting. So there is not much of enthusiasm. But anyway, I don't expect the Nifty to cross 6150 in the immediate future. That is over the next at least a 3 to 4 week time horizon. Post that, what happens, that is a different issue. But I don't expect a new high, at least in this coming month of Feb also. So even pre-budget, I don't expect there may be a rally, but I don't think 50 will be taken out, and on the downside also 59.80, 59.50, that also will not be broken.
Melbourne, tomorrow the big event will be the credit policy. What to your mind are markets discounting and what are markets expecting?
I think a 25 basis point is something that the market is clearly expecting, and I think that expectation can stand validated if it happens. What I'm trying to state is, the markets will not react too much if a 25 basis point cut comes. But if we don't have the 25 basis point comes, for whatever reason, I think the markets could tank. When I say tank, it could be 100 points for the Nifty also can happen. But by and large, the street is expecting a 25 basis point cut. Bond markets are not going to react at all if that happens. And even I think the stock markets, will react, if anything, in the positive side only because while there could be the bankers who would come and say, or the skeptics may come and say that a 25 basis point cut comes, but inflation is going to be a worrying factor, so going ahead RBI may not cut rates. I don't think the market is going to bother about that too much, because once a 25 basis point cut comes, the market is going to be happy about one thing, that okay, the direction is clear now. The interest rate cut has happened, and going ahead, if not March, maybe April, maybe June, we'll have one more cut coming. So I think the market will like it, but to a large extent, the 25 basis point cut is already in the prices.
Prasun, would encourage you to also join in there. What are your expectations from tomorrow's event? 25, 50 or no rate cut?
Well, I think the market is obviously anticipating a 25 basis cut at the least. My own sense is that we would possibly get a 25 basis cut, because the way I'm looking at it is, if you read what RBI said in the last policy statement, couple that with the way the inflation has positively surprised for the last 3 readings, I think a 25 basis cut is on the cards. And I do expect the RBI commentary to be not very hawkish. So I think the market will get what it wants from RBI policy. I would not put my money on a 50 basis cut. If that happens, probably market will be very positively surprised, but I would not put my money on that at the moment. But what I would really anticipate is RBI cutting tomorrow and then leaving room for further cuts open as we go along, provided the data really supports it. So I think given that, I think market should get what they're expecting from the RBI tomorrow.
Prasun, but what happens in a scenario if we don't get a 25-50? I mean, if you don't get a rate cut, what happens then?
Well, I guess the market will react negatively, of course, no doubt about that. But also, one has to look at it in this way. Even last time RBI was expected to cut, it did not cut, but it basically indicated that cuts are around the corner, and they are likely to cut somewhere in the first quarter of the calendar year 2013. So I think that will stay. So if the cut doesn't come now, RBI will definitely indicate that the cut is likely in February or March. Well, that could disappoint the market for a while, but as long as the commentary from the RBI indicates that there are cuts around the corner and RBI is getting more growth and inflation is definitely an issue, but it's coming under control better than what it was before, I think the market will take heart from that. Well, there could be a knee-jerk reaction and market could correct a bit, but I think market will get around to that. So I would, in fact, if that happens, one should use that opportunity to accumulate again.
Right.
If the RBI commentary remains positive on rate cut.
Yeah, so given the kind of environment we are in at a time when numbers have done the trick for us, globally things are looking stable. Tomorrow's RBI event is of extreme importance for Indian markets, and surely a lot of traders are leaning on Reserve Bank of India to really kickstart the momentum. But the stock which I want to discuss at length today is Tata Motors, and the reason why I'm discussing Tata Motors is because Tata Motors corrected on Thursday, it recovered on Friday, and it has closed above 300 rupees today. Mehboob, Tata Motors on Wednesday evening indicated that JLR business will slow down, margins will come under pressure. The stock cracked on Thursday, but it has recovered more than 50% on Friday and on today.
Yeah, Nikunj, I remember we discussed it with you when this source of post profit warning came in a way from JLR, and I think post the conference call, I think people regained their nerves and said, okay, fine, things are bad for the time being. But as far as the outlook goes, as far as the slew of models which the company plans to launch, I think things look fairly decent for JLR, honestly. And I think we need to accept the fact that 2-3 years down the line, China as well as Europe, which are the main markets for JLR, could possibly be in much better shape than what they are today. So all said and done, Tata Motors is no longer a domestic company. So when you talk of CV sales in India, I think it doesn't affect Tata Motors any longer. 90-95% of its bottom line comes from JLR. So a profit warning, stock reacted. Let's accept the fact that the stock had gone up a little bit too sharply. It had outperformed the auto index by a decent margin. So from a 320, 315 coming back to 270 and bouncing back, I think fine. I think around 260, 270 that day or so, post the profit warning I had mentioned to you, Nikunj, that I think that would be a great opportunity for investors who are feeling left out as far as Tata Motors goes to make a new entry at around that level. And I still say the same thing, around 260, 270 would be a good price. Rebounding from 270 back to 300 is something which honestly has surprised me also in such a short period of time. But all said and done, this is the market. Market is always sometimes beats you as far as timing goes. Maybe around 270, 75, Tata Motors comes, possibly we'll make a re-entry in the stock.
Mehboob, what are your thoughts on Axis Bank? In the near term, if the bank indeed manages to raise about 6,000 crore, that will only shore up the book value, and if the book value goes up, optically the stock will look cheap.
Yeah, true, Nikunj, but definitely not at my top 4 or 5 picks in the banking sector. I still remain completely biased in favor of private sector banks over public sector banks. But it all depends. I think if you are playing for the RBI policy, a rate cut coming, if not 25-50 basis point cut coming, I think you could look at a little bit of slightly high beta private sector banks, and in that possibly ICICI Bank stands out. And if one needs to stick to decent names in the portfolio for a long period of time without bothering too much about the short-term or near-term fluctuation in the share price, I think I will continue to be with my top pick, HDFC Bank at number 1 and IndusInd Bank at number 2, possibly giving ING by share number 3.
Well, ING official numbers came after the bell and markets will react to those numbers, and the hallmark there has been that net NPAs, which is non-performing assets for the quarter gone by, they have come down dramatically. So the good news here is that private banks, they have managed to manage their NPAs selectively. PSU banks, they have not really conducted themselves very well. So there is a reason why private banks are outperforming, and based on Q3 numbers, the premium is unlikely to come down. Prasun, you currently have a large exposure to private banks, but after the recent run-up, are you still bullish on them?
See, I would not want to get into individual names, but if you look at a portfolio and in general, I do think private banks have done very well. I do not see any further expansion in their valuations, but some of these banks can continue to deliver a 25 to 30% earnings growth, and that is good enough even if the valuations and the multiples do not change. Having said that, between private and public sector banks, I think at the current juncture, I would really look to play the public sector banks because I think they could possibly give a better return over the next 12 to 18 months. They are undervalued very clearly. If we are seeing some turnaround in the economy, some bottoming of earnings, I think a lot of traction could come from lower restructured assets, lower provisioning, given a tailwind of falling interest rates as well. So I think that is one sector one really wants to really play. While private sector banks, one would continue to remain invested purely for the earnings growth. I don't think that is really going to work.
Sandeep, JP Associates, now for 2012, JP Associates was considered as the pivot stock. It was the canary in the coal mine for momentum stocks. But for this year, JP Associates indeed has disappointed traders.
Well, yes, at higher levels of around 105 or so, it is facing a very stiff resistance, and it has not been successfully able to cross that. And if you ask me what to do at this point, I am not that bearish also. I mean, it will move between 80 on the downside, 100 on the upside. So there is no point in shorting it either. I mean, it could even move up to 95, 98 that levels. So that is the range I am mapping this stock at.
Peerboon, after the recent run-up in telecom stocks, do you think the upside is now limited and restricted?
I suppose so. I think there are still a whole lot of questions being asked as to whether this particular hike in rates or increase in rates with the telecom companies recently announced, will they be sustained? How much will that ultimately affect usage is another question, because the past experience is not very positive on this particular count. But on the whole, I think this reason alone possibly could get certain stocks a re-rating or a buy rating from some brokerage houses. So maybe some more upside, possibly yes. But if you ask me on a fundamental basis, from a longer term basis, I think looking at the run-up with the stocks have happened, I'm not very comfortable in recommending them for the simple reason that I still am not very sure as to the problem between the regulators and what continuously keeps on happening to this particular sector, what sort of impact ultimately it will have on earnings and on the valuation as far as the stocks goes. So I think there could be some more upset from a trading angle purely because of the increase in rates, tariff rates with this companies have announced. There could be a re-rating, some more upside from a trading side, but from a fundamental basis or a longer term basis, not very comfortable at the present valuations.
Sandeep Agle, I'll take my chances with this one. BEL, Bharat Electronics Limited, up 70 rupees. It went up on strong volumes. Numbers came out and numbers were above estimates. Do you track this one?
Nikunj, I do, and I am quite impressed